Okay, just see where we're at. All right, good to go. Morning, traders, and welcome to the morning playbook. Well, good morning if you're in Melbourne or Sydney or Australia. Now, just let me know if I'm coming through all good. See who's on. Jason, g'day, mate. Hope you're doing well. I know you're doing that to rub it in now. I'm freezing. Heaters on all over the place down here. Um, Good morning. How you doing? The Mono Territory. All right, we'll get straight into it. So what I'm going to go over today is just the ideas I'm looking at on the Hang Seng, the Dow, and the SPY 200, which will open up in about 5-10 minutes. So we'll get onto those first and just have a quick look at session and bargain. Yeah. So I'm looking at a bit of strength coming into the Aussie market just after what happened in last night. So you can see during yesterday, there's quite a bit of weakness hanging around on the Dow during the Asian session, and the Hang Seng backed off a bit. The Hang Seng was actually strangely strong considering the selling pressure that was across the board. The SPY drifted low, ASX got smacked down a bit, pretty much from the open pushed down a bit, retested that open, and then pretty much was selling all day yesterday on the ASX. So all that pressure was the Hang Seng is actually, it was very whippy on the open. So it was whippy because it wanted to hold up. All right, so it looked quite positive. So I would expect some strength coming to the Hang Seng today, maybe to retest those highs from the previous couple of days, which we'll go on in a minute. Well, actually, we'll look at that now. You can see all through here it was choppy, and that's not conducive of anyone that wants to sell. You can see that open 11.15, smacked down, the Dow was under pressure there, retested those lows, rejected pretty quickly. Any sort of selling pressure later on was held up. The Dow, once the Hang Seng closed for that hour, the Dow headed south. It was getting sold down, whereas the Hang Seng open actually got buoyed. So that selling pressure you can see on these 30-minute candles was getting bought up, bought up, bought up. So that to me, I was actually going to send out an alert yesterday to see, just be careful about a buying opportunity going, which played out later on, but there was nothing much setting up at that stage. We got Europe opened and was under pressure as well. So you can see that Hang Seng pressure there, but then the market started to get buoyed up later on. So especially the US, the US opened quite well, sold off a bit. Then it was getting any selling pressure was getting soaked up quite well, and then they had that rally, that spurt higher into the close, which they ended up in the green for the day. So I'd expect Europe to catch up on the open at 4 o'clock or 4 p.m. Sydney time, or 5 p.m. Sydney time actually for the indices. The futures might, they'll obviously wash around and rinse set people out of the market between that 4 and 5 mark, and then after that we'll see what the indices do. I would expect them to play catch up to the US close. All right, so there's a bit of a pop on the US close, and just it depends on obviously what happens today. So this is the Dow. I would expect that Dow was holding. So we sent out an alert just to watch for a potential buy somewhere out here. It just didn't set up much until I would expect a bit more strength, after this bit of a pullback here, and then start to load up and really push up into the US Open. But it didn't happen until later on. We've got that retest of this low at 25,805, which is a day's lows, and then we started to rally, and we've closed back above this 26.1. Now here I wouldn't mind seeing a bit more of a flush lower. You can see the MAs are starting to catch up, a bit of a flush lower just after yesterday's sentiment, especially for the ASX. If that flush lower is going to generate a bit of selling and then turn around and squeeze them just straight back out, and that could be the start of momentum we need for a push higher. Okay. But that's what I'll be looking for on the Dow. It just depends what sort of price action comes about in the next hour or so. Otherwise, if we do jam too far lower and then we start going to more of a range-bound trade, we may have to retest this zone at 26,105 and then head south again, which is the high from around midnight last night. Okay, so SPY I would expect to, just after the selling, you're going to get that retail euphoria after seeing the Dow up, again, 100 something points. Our market was down about 90 on the ASX. Just expect a bit of euphoria in the opener. Wouldn't mind seeing the SPY smash up and then start to get sold into the close. There's still some negativity, without a doubt. There's some negativity around on the ASX at the moment. the way we're getting sold hard the last few days. It could just be a bit of catch up on the overall market, which we'll show you over here if I can get onto that. Where are we? On the ASX, bit of that selling pressure. We just could be set to hold that low. I mean, if we get another day we spike down today and then we start to buying into the close, that's not a bad sign at all. But I think there's still some negativity. If we start trading down to 57.14, that's going to be a bit of an issue in our market. It is there's still more than enough reasons to be negative into the market, and to me, not enough reasons to be positive. But the only one fact to be positive is the fact that it's going up. So it makes it tough to be on the long side, and you've really got to, at this stage, you really got to start choosing your entry setups wisely. Make sure they're a high probability setup. Let's go to the dollar index. It's the thing that's moving the market at the moment. Excuse me. It's really keeping our eye on that. Now, I expected maybe a bit of follow through. I mean, that was extended yesterday, and we were coming down to this zone. Was that on the open? No, we're up here on the open. I expect we could have seen a bit of follow through. The problem is that the market was starting to roll, and at that case, if we did get some follow through, okay, there might be some more negativity in the indices, and that was starting to show up yesterday day on the Dow. But don't forget, the Dow's easily moved around, and they can chop it around out of hours and just set up moves for the coming US Open, and knowing what the overall market's doing. So you just got to be careful of that. Hey, Neville, just got to be careful of that. So with the dollar, the fact that it was starting to get held down, that opened up that move down to that support zone. Now, the fact that it's down to support zone, look, it's bearish for the dollar because it has extended to that zone. But the fact that we're extending into that zone, you've got to be careful because I'm a bit of a believer that I wouldn't see, even if we push through that zone today, I'm not a believer that we're going to head all the way down. I wouldn't be selling that purely because we are extended. To me, it needs to prove another lower high. Another lower high could open up, and some consolidation, say around 96.70 or thereabouts, could open up a move to take out that low, and then we're trading all the way down to 95.75. Now, if that's the case, and we're going to go down to that level, then equities are going to run. That you would expect them to run, because anything weakness into the dollar, no safe haven buying at all, means strength in the equity markets or continued strength in the equity markets. Now, UK just come out and said they've got more stimulus coming. So everyone is forgetting about any negative activity, and they're just purely focused on stimulus. The more stimulus, the better. I mean, sooner or later, the party's going to come to an end. And it's whether it's now, whether we're going to see, that's exactly what I'm looking for, Neville. I'm looking more for something where it could wash them out. You're going to get, I don't like to say, but more you retail traders going, okay, buy on the break of the low, but they're forgetting that that's really extended. The market extends into a level for a particular reason. It doesn't extend in a level because it's going to jam through. If it's going to jam through, you might see some consolidation above it and then straight through. I would expect, if this was going to go straight through that zone, I would expect a move off that high. Take out some lows and then start to, if I can do that, start to consolidate and then get a sudden move down. Because what that does, it creates some buyers here, or maybe at a lower level, it creates some buyers just above that resistance, that support zone, and it does the same thing at resistance. Creates some buyers that think, okay, it's going to hold up and we're going to take off. But it turns around and it dumps on them. Okay, and that's what you're going to get if there's enough buyers there that have to turn around and get stopped out, and it's around about a support zone. That's where you get that selling pressure. They can add to the selling pressure and just go straight through a zone. Now, when it jams straight into a zone like that, I'm more inclined to believe we're going to get some back and fill. Back and fill meaning a bit of a run back up. Now, that will be interesting, because if you go and look at, say, the Aussie looks intent on getting up to 70.50, which is not far above where we are at the moment. No, 50, 60, 70 pips above, which you could easily do that today. It could just spike up into that resistance zone. That's been quite strong. Any US dollar weakness has been soaked up. Any market weakness was soaked up by the Aussie, and the Aussie rallied hard. Once you got that buying come back into the Dow, the Aussie took off. The same with any sort of buying back into the markets. Yesterday, it was getting bought back up into the Aussie. So it looks intent on holding this inside level around 69.25 and pushing up to 70.50. We may stall again up here. We may flush this high and come back. It is getting extended. You can see that we want to be watching that momentum and see if that starts to slow. that momentum starts to slow and roll over, and we're not really going anywhere, then just look for a bit of a long squeeze. And if you go and look at the euro is much the same. It's up into that a resistance zone around 113.50. It's spiked up there, and we got a bit of reaction off that level with the sellers. Just saw your comment there. I completely agree. It's a middle finger move, and it catches people out all the time. Um, so if we just keep an eye on the euro too, and if that starts to find some lower highs and pressure come in, it may be short-lived, but we may get a bit of minor of a pullback. It's all going to do with the US dollar and what's happening with equity markets, and just the usual trick. And if stimulus keeps coming out, I expect the support of stimulus to continue. And then you've got elections coming up. I think we're really focused on elections. The market's focused on elections and in US earnings. So if earnings come out and just get hammered, the earnings come out rubbish, then I don't see any reason why this market would want to go higher. If they're lower than expected and we're factored in higher earnings or not bad earnings or a good recovery, then all of a sudden the recoveries run off the rails. Why would you be holding equities without at least taking some profits? Now over to gold. Gold got extended, and now you read that in the news, and it's your typical news reporters are looking at it saying, "Oh, gold is a safe haven data," but why is it a safe haven when equity indices were going up? Okay, and also it's more just linked in with the US dollar. US dollar goes down, it's better prices for gold. Simple. It's just a currency in that respect. There's no real safe haven because there hasn't been a massive sell-off into equities at the moment. They're still getting soaked up. The US are still getting soaked up last night, so I'm expecting that's a bit extended. If we get that bounce in the US dollar like we are just talking about, and the same, you get that sell-off in the Aussie and the euro, that means the US dollar is moving up, which would expect to get some heat come out of gold and a flush lower. It's just whether or not it just pulls back to this support and goes again, or pulls back even this inside level at 17.90. That would suggest it's only $18 away from here, which you can do in a session. But if we start to take out too many of these support zones, then that would mean that the US dollar is rallying harder. Okay, so as long as that US dollar continues lower, I would expect gold to continue higher. Not so much because of a safe haven. Okay, US dollar is also a safe haven that shouldn't be going down if that's the case. Gold, I'll go into. I just want to quickly look at crude. Crude finally held above that 40 zone. It's been sort of chopping above and below that 40 zone for a while. So to me, I think that opens up 41.50 just in the near term. Forget about this green. This green here. Got that wrong yesterday. All right. So that opens up the move to 41.50. So it's still holding inside higher lows. Inside higher lows. It looks like it's going to roll there for a stage, maybe potentially roll, but I think that strength and that bounce into equities yesterday suggests we're pushing up to at least 41.50, potentially flushing that level. Maybe get a back and fill, retest to 40 before we go. But again, everything's interlinked to this equity market rally. Copper's been a one-way street. It's an absolute bullish, that one. That to me is a lot stronger and it's getting supported somehow and ramped. I don't think these sorts of moves are not suggestive of someone accumulating. They've already accumulated and they're on the ramp mode, ramping up to potentially looking at this. I won't go back that far. 2287, which is previous key highs back from January, I think it was. So it looks like it's intent on getting there. Now, if equity markets sell off, there's going to be carnage into copper because there's so many buys loaded long, and there's some major long holders, which to me it's just fuel for a sell-off. And like I said, if you get into a key level, that's going to trigger something. It can't trigger, generally they're going to pop it through just to trigger the retail buyers, just for fuel to sell it lower. So we'll just have to wait and see how that goes, but I'm expecting a bit of carnage into that if that plays out. Now, Bitcoin, last thing I just want to cover a couple of cryptos. Not so much. That was I'm on the hourly chart here. You can see it's consolidating through there. It's holding some minor higher levels. It's really whippy, really choppy. This could be just a setup for a sell lower. I mean, you might have this resistance zone wrong, but it's found support at around 89.50. It's been launching off that support. You've got inside support here at this zone through here. It's about 9,200, which has found some recent buys. Now, this action suggests we're going to at least go up to 96, 97, 9,700. Okay, and if that's the case, we break through there. If we break through convincingly, you want to see a convincing break and then buy on a pullback. okay, for that run up to 10,400, say. If we don't get through it, it's going to be Neville's middle finger trade, okay, and then we're going to sell off from that high. All right, so that's what I'll be keeping an eye on, and I think Ethereum's pretty much the same there. Ethereum's looking a little bit better, and it's this consolidation through, we've come to that point of agreement. We've pretty much gone sideways here. We've been range bound, so we could continue to be range bound in Ethereum. It's up near a sell zone, getting up there near there now. If Bitcoin kicks on, I wouldn't expect this to kick on as hard. I think your trader's going to be waiting to see what happens on Bitcoin up near this resistance zone, or sorry, this inside resistance zone at 96,700, which you could do in a couple of sessions, or one session even. All right, so that's pretty much all I wanted to cover today. Let's just see where that SPY has opened. Yeah, look, there's nothing too major. It's just chopping around here. Flush out a few of these sellers in here. It may need to flush out some of these buyers too, which brought up into the close. So just keep an eye on the SPY. So if we can flush down, see if we can hold the higher level and get that run up. And I would expect that to happen soon, just when equity is about to open. All right, so it's expecting on the ASX to open about 50 points or so. So it's whether it can continue on higher and make back the losses from yesterday. All right, guys, we'll finish it up there. Thanks very much for joining me. Back in tomorrow at 9:40 again. If you like what you hear, just be great if you can leave us a like or help us spread the word. Remember, we're on Facebook, Twitter, all the usual suspects, and subscribe to us at YouTube. Just go through to the website, tradesetup.com.au, and just see where we are, get the links, and then follow us on there. So there'll be other bits and pieces there. All right, guys, thanks very much for joining us. We'll speak to you again soon.